Good evening, everyone. So today I'm just gonna do a short trade analysis, right? I usually mark the chart analysis and send the pictorials, uh, but for a change, I just wanna show you the price action and discuss what type of price action we can expect, and give you something in addition to what I've been discussing all this time. Okay. Uh, so today's EU. You of course know if you watch the first video how we trade and look at the different timing sessions and the zones. So we have the Asia session here, we have the London session here, and we also have the New York session here, right? Now of course these sessions can be overlapped according to some people, but I have them separated, right? um, Overall, when you look at the Asian session at a glance, you can see there is a build up on either side, right? Uh, on retail terms, you can also call this a consolidation, where there is a build up on either side, creating sell side liquidity and buy side liquidity. So after a build up, what do you expect? You expect a manipulation, or what you call an inducement in lead terms, right? So after a build up, inducement, you can see the price drop down. Now after price drop down, you have to see whether the price takes a minor, medium, a major liquidity or not, and then act on it, right? And then when you see the price take out the Asia low as well, right? So if you guys focus very carefully, you can see these were relatively equal lows over here, right? These twos were relatively equal lows over here, and then once price took out those lows, you can expect some sort of a reversal, and that's the reversal you can expect with timing. And that happened exactly at London Open, and I've told you the importance of London Open and the Frankfurt Open. While the Frankfurt Open fueled this move down, right, soon after the timing, right, I advise you to guys to go and check out the timing video if you all haven't yet, right? Now once the Frankfurt pushes the price down, you would see London take out this minor liquidity, uh, right, and then push the price up. Of course, if you want a detail, right, look into it, you would see trend lines being formed in this fashion as well, right? You can see channel build-ups, inducement of the high to go down, and whether it's a relevant break of structure, mitigation, all those can be checked out on the lower time frames with the same 3 or the M1, right? The whole point here is to understand what sort of liquidity the price takes. And after sweeping that minor liquidity, right? After sweeping that minor liquidity, your high time frame, your high risk entries will be here, right? Your high risk entries would be here soon after the liquidation being taken place, right? Or you wait for a relevant break of structure, right? Relevant break of structure. Why is that a relevant break of structure? Because it swept a relevant liquidity. If it did not sweep a relevant liquidity, it would not be a relevant break of structure. Now, for example, although, so you can ask me what about the Asian high? Now you need to understand, although the Asian high, right, was formed over here, you can see there is no clear sweep of it. Initially there was a high being formed. As soon as the high formed, price continue going up without a push down, right? There was no push down, and then there was no sweep here. So instead, what happened, without a clear sweep like this, you could see price continue going up and then going down. So there was no clear inducement of the high to go low. So in that sense, this would be a fake break of structure. Okay, that's one of the other criteria where you identify fake break of structure. And you should understand there is liquidity resting on these highs, especially these highs. Why? These are session highs, right? These are session highs, and this is an equal high as well, right? You could see price making an equal high here, you could see price making an equal high here, right? I'll discuss this price action later on. Now moving on, right? If that is um, a relevant break of structure, right? If that is a relevant break of structure, moment, yeah, if that is a relevant break of structure, what do you expect? You can expect the price to drop down, right? It can be a mitigation if you are playing, if your entry models allow you to mitigate, right? It can be mitigation. If not, this could be one entry, right? Either you take partials here and then you can set break even, and then this could be another entry where you're trying to continue during the London continuation zone, right? During the London continuation zone, I have explained this with the on the timing video as well, right? This would be a London continuation zone where you can expect. So this is another period where ignore trading, or usually you can enter into trades if it's very clear, especially when it comes to when you're nearing into the New York open time area, right? So you could say one of my entries were from here, and what do you do? There's another channel build up again, right? It's pretty simple, because if you have your bias for the day correct, right, then all the trades would be very easy to match up and very easy to understand, because then you would understand, okay, buys are pro, so all you're waiting for the day is for a build up and for an inducement of the low to go up, right? So in that case, what can you expect? In that case, you can expect a channel build up to form an inducement, and that inducement ideally should happen with the timing, right? With happen with the timing. So this happened just before New York Open. So I was in buys in EU, mainly GU as well, right? So mainly GU, right? So you could see this low was created before our timing, right? What is our timing in your open? And that's why you can see this low being swept later on at the New York trap time, right? At the New York trap time. Why? It wants to, why do you call it a New York trap, right? Why do you call it a New York trap? Because sometimes New York trap traps the New York open, right? And when price creates a relatively equal high here, so we have a high over here, right, and we have a high over here too. So when price creates relatively equal highs, what do you expect, right? After a clear inducement, after price action, right, sweeps relevant sell side liquidity, you by creating an actual high, right? So this will be a false break of structure again or whatever not, right? Actual low during the New York session. That's why timing is important again. Then the actual move comes, right? That's the actual move, and you can see price pushing up all the way up here after an inducement at New York trap, right? By sweeping this low, simple as that. Now you could get into the trade here, of course that, but if you're waiting for a break of structure on M5, right, that's not gonna work out. So that's why you need to get into lower time frame and get into that price action to understand, right? Then of course you can enter into those trades, whether it's buys or sells. Okay. um then what happens over here? It creates a triple equal high. Yes or no, right? It creates a triple equal high. So isn't this a magnet in the sense when you have an equal high here, a high here, a high here, and then you only expect for the price to continue going up. So you could find an entry here also to target into this liquidity. And once these liquidities are taken, right? Once these liquidities are taken, uh, especially when it comes to this high, right? That's when you ideally should take partials and set break even, and maybe you know let the runners run up to whatever the liquidity on the high time frame. Okay. um, the cells, right, the initial cells from here was trying to trade this fake move down and to capitalize the fake move down. But you should understand what's the actual move here. The actual move here is the buy move. Now this is a problem with many of the lit traders, right? Me as well, when I was beginning, so you used to stare at naked 5 minute chart, right? You just stare at the 5 minute chart without understanding the importance of timing and price, and most importantly the higher time frame perspective as well, right? You could mark all the build-ups you want. You could mark a build up here, you could mark a build up here, and you could also call these as inducements and then pushing the price up. But what is the point if you don't know that this is not a true inducement, and then today you're gonna get some uh, price to push up, and then this is not going to be a London knockout. Okay. Today it was a London knockout because London induced a low and then pushed the price up. But any other day, easily this could be London pushing the high and then New York sweeping the high and then dropping down. So why isn't the price dropping down? Why isn't the price going down? That's when you need to understand that using high time frame is very, very important when it comes to directional bias. So don't get fooled uh, when you see people posting on M5 charts or M3 charts, M1 charts, whatever it is, right? uh, Without doing high time frame analysis, there is no point in trading on the lower time frame, right? And that's why you can see here me having weekly, monthly, daily, 4 hour, 1 hour, whatever it is, right? If you don't understand the importance of the high time frame liquidity concepts, right? Price and time, everything is fractal. So if you don't understand, right, whatever we marked on the M5 has some key relevance on the lower time, on the higher time frame as well, uh, then there's no point, right? So you should focus on that and understand where your next liquidity targets are, where could the price possibly reverse, and those should be your targets. And these two, right? You should understand once price creates a high like this, right? After sweeping these liquidities here, right? If you guys can remember, um, this was the Thursday high, right? This was the Thursday high. So after sweeping this liquidity here, right? You can expect some short pullback, but that pullback would be short lived because this high needs to be ideally be taken. So try to understand analyzing in an M5 chart, right? Analyzing uh, through the eyes of an M5 chart is key for you to understand price action. But without high time frame price action, without understanding a high time frame direction, you would not be able to understand why the price action is moving this way. You would not be able to understand what are the intentions of the price, whether there's a build up uh, to induce the high to go to the low or a build up to induce the low to go to the high, right? I hope that's something important and that's something useful for you. Let me know if you all have questions. Cheers. See you next time with another video.